Welcome to the Nadex Application and Strategy Webinar Series presented by Daryl Martin from ApexInvesting.com. Today we're talking about in-the-money versus out-of-the-money binary strikes and strategies for different binary strikes. If you've ever traded options before, then you're no doubt familiar with the terms in-the-money and out-of-the-money, or ITM for in-the-money and OTM for out-of-the-money. Binaries are unique in the fact that in-the-money or out-of-the-money depends upon whether you are long or short the binary, basically whether you're buying it or selling it. Most binary brokers only offer in-the-money binary options. However, Nadex is not a binary broker, it's a binary exchange, and it's the only U.S. regulated exchange which directly accepts retail traders as members. Nadex not only offers in-the-money binaries, it also offers out-of-the-money binaries as well. And binaries on Nadex can be closed before expiration. And if they're held to expiration, it is important to understand that they must be in the money to be profitable. Alright, so let's look at an example on a binary that's in the money versus out of the money if you bought the binary. And we'll check out the USD 500 binary, which is a derivative of the S&P 500 E-mini futures. And right now, the S&P 500 E-mini futures is trading at 1384. So if you buy a binary, what you're doing is you're saying that the following statement will be true at expiration, that the USD 500 December contract will be greater than 1383 at 3 o'clock Eastern Time. If the market is greater than the strike price, so 1384 being greater than 1383, if it's greater than that at expiration, then you'll have a profitable trade. In addition, you can know right now that the binary is currently in the money because the market is currently greater than the strike price. And again, when you buy a binary, you're saying the statement will be true, and to know if it's in the money or out of the money, is it currently true? So let's look at a couple that are false. So the USD 500 December contract is greater than 1389. Well, right now, if the S&P 500 is at 1384, that statement is false. So that binary is out of the money. And if the S&P 500 E-mini futures close out at 1384 at 3 o'clock Eastern Time, then that would be a losing trade. Same thing with the 1384, and this can get a little bit tricky, but if it's equal to, then it's not greater than, right? It has to be greater than to be in the money. So if it's equal to, it's also out of the money. So as a quick summary, an in-the-money binary strike that you buy is one that is currently greater than the strike, and at expiration will also be greater than the strike. As the market oscillates, the binary can become in the money or out of the money, but at expiration it must be in the money to be profitable. And as a quick reminder, you don't have to hold the binary till expiration. You can close it before expiration, and it does not matter if it's in the money or out of the money if you close it before expiration. If you buy it lower than you sell it, then that would be a profitable trade. And if you sell it lower than you bought it, that would be a losing trade. Alright, so now let's look at an example of an out of the money binary. Well, remember, right now we have the S&P at 1384. And we're looking at a binary where it says the US 500 December contract will be greater than 1389 at 415. And again, the market's at 1384, and this says 1389. So it's currently out of the money because the market is less than the strike. Therefore, if you're buying the binary, then the binary is currently out of the money. And if you bought it for a $20 risk, right here, about $20 risk, okay, then you have a potential of an $80 profit because every binary is worth $100. So if you're risking 20, you could potentially make 80 if you held it to expiration. So as the market rose on this day, you can see the value of the binary went up. And so you could have sold it for 30, for 40, for 50, for 60, 70, 80, 90, and eventually it expired out at $100. And out of the money binaries are great because they have an excellent risk to reward ratio. So you can use them for straddles. You could use them for buying when you think there's going to be a big move on news or something like that. And you can use them for medium or short-term trends or even swing trades. And again, you can always close it before expiration. Right now, in this binary is in the money. Okay? Well, how do I know that? Well, the S&P 500, again, is currently at 1384. And the statement says that the USD 500 December contract will be greater than 1383 at 415. So since the market is greater than the strike, then it is in the money since we're buying it. Okay? In the money binaries will generally have a risk of $50 or more. And as long as they stay in the money at expiration, then the trade will be a profitable trade. All right, so not only can we buy a binary when we think the market is going to go up, but we can sell a binary when we think the market is going to go down. And let's look at the exact same thing, the S&P 500 E-mini futures, and we're looking at the USD 500 binaries. And right now the S&P 500 is trading at 1384. And as you recall, when we talked about an in-the-money binary, for it to be an in-the-money binary when you buy, the market has to be greater than the binary strike. But for an in-the-money binary when you sell, it's just the opposite. The market has to be less than or equal to the strike. So if the market's at 1384, it's less than 1389. If the market's at 1384, then it's equal to 1384. Therefore, both of these strikes would be considered in the money. Okay? And basically, in the money would be like the statement is false. So when you're buying a binary, you're saying the statement's true. When you're selling a binary, you're saying the statement is false. At expiration, for these trades to be profitable, that these statements would need to be false, meaning the S&P 500 E-mini futures would need to be less than or equal to 1384 or less than or equal to 1389 at 3 o'clock Eastern Time. Now, an out-of-the-money binary simply means the market is greater than the strike. So if the statement says the USD 500 December contract will be greater than 1383 at 3 o'clock, well, the market is obviously greater than 1383, so the binary is out of the money. The binary can go from being out of the money to in the money, but if it's out of the money at expiration, then the trade will be a losing trade. And just like on when you buy a binary, you can always sell a binary and then buy it back at a lower price for potential profit, or if you sell it and buy it back at a higher price, it would be a losing trade. All right, so now let's look at an example of an in-the-money binary. And what we're looking at right now, again, is the S&P 500, currently trading at 1384. And this binary says that the USD 500 will be greater than 1377 at 415. Now remember, we're selling the binary, so we're saying that statement is going to be false. We're saying that it will be less than or equal to by selling it. Well, if the market is currently greater than the strike, then that statement is currently true. Therefore, the binary is out of the money. What this means is that we have a potential of $20 risk and an $80 profit potential on the trade. Because what we're going to do is we're going to sell it at $80 with the hopes that we can buy it back lower at 70, 60, 50, 40, 30, all the way down. If it expires in the money, then we could actually make $80 on the trade. Now, in this example, you can see that the S&P 500 E-mini is currently trading at 1383. And the binary strike says that the S&P 500 will be greater than 1383 at expiration. We think that statement's false, so we sell. And if we say it's false, that means we think it'll be less than or equal to. Well, since the market is currently equal to the strike price of 1383, then it's in the money. And again, in the money binaries will generally have a risk of $50 or more. And it must expire in the money to be profitable. And as you can see, as the market went along, the market rose. So this binary actually expired out of the money. We sold it at 50, basically had to buy it back at expiration at 100. Therefore, we lost $50 on this trade. Or if we would have bought the binary, we would have bought it at 50 and sold it out or expired at 100 and been profitable on the trade. All right, go ahead and open a live or demo account if you haven't already. Simply go to www.nadex.com today. Also, visit me over at apexinvesting.com and learn more about how I trade binaries, and I'd be happy to answer any questions that you have.